Morgan Epikaizo Gama Jr. So if you've not yet subscribed to my YouTube channel, ensure to subscribe and hit the notification button for every update of the video content that I'll be sharing. Okay, without wasting much of your time, let us get into the main. Okay, so introduction to financial accounting. Okay, so under here, all right, okay, so we'll start with the concepts of accountants. The concept of accountants, as well as we'll look at the accounting theory, the principles, and the concept. So the concept of accountants, the foreign concept are used in accounting. Okay, so the foreign concept that I used in accounting, number one, we have assets. What are assets? Assets, these are things that can help you to generate and raise what? Revenue. Okay, then the second one is owner's equity. Owner's equity, we're talking about a person what? Capital available, the amount of money that is available to start maybe a business or maybe anything that a person wants to set up. Then we have so equity, it can either be in form of property, in form of companies or anything that you own, that is owned as equity. Then capital, now it's talking about the money format. How much capital do you have? Liabilities, we talk about things that like things that are not assets, things that you like, as in they just consume your money. Liability, I'll give an example of liability. This can be if a car is not, it is not used for, as in just, you're not using it for business, but you're just using it for moving up and down, then that one becomes a liability because you like it is consuming more than what it is bringing in. Okay, so liability, these are just things that usually consumes, but they don't bring us some income. They don't bring some any income in your business. Then we also have expense as well as income. So these are the main concept of accountants. Okay, now let's look at the other component. Okay, so the other component here, look at the capital business. So capital for a new business, most transactions are accompanied by the source of what? Documents. So like if you're setting up a business, that business should be accompanied with some source of what? Documents. And some documents represents the starting points of the recording process information from which each transaction is systematically classified and filled and what subsequently entered into the respective book of the prime entry. So for example, if you say for instance you want to start up a business, it's a new business, then you've got that capital for that business, so you need to have certain books where you should be doing accounting process. You need to have a ledger which as well as your expenses. Then from there, maybe you can take it up into a trial balance sheet where you need to put up your debit as well as your credit and whatnot. Then you balance it up. So documentation is important in financial accounting. Okay. Now let's look at the profit motive. Profit motive. Remember in here, this is where we discuss about profit and losses. So the profit motive, under profit motive, most transactions that are accompanied by the source documents, the source document represents the starting point of the recording process by providing the detailed information from which each transaction is systematically classified and filled and subsequently entered into the respective book of the primary entry. So in here, if at all you have a ledger with you, every time you make maybe some profit and whatnot, because you'll be able to record everything because it has columns. Put in your expense as well as the what is the income. Then you also need to put something where you'll be put your sales as well as the expense that you've made for that particular time. Okay, then the other part we'll look at the different form of what ownership. So different form of ownership, it is the following are some of the concepts that are used in accounting, especially for different forms of ownership. Number one, assets. Assets are very much important. Owners equity as well as capital, liabilities, expense, and income. These are very much important because these are the ones that usually gives the forms of ownership. You need to have assets to start with. Okay, then besides that, let's look at the forms of ownership. How can one get that ownership? So ownership comes most of that documents. The source document usually represents the starting point of the recording process, providing the detailed information from each transaction, which is just systematically classified and filled and subsequently entered into the book as of primary entry. So even the form of ownership, these are just documentation where each and every transaction is accompanied by a document. If let's say, for example, Mr. Chwala, you own a certain business firm or a company, you need to produce certain documentation that will support, that will prove to say indeed the ownership is yours. Without which, then that ownership, the council will come and then they'll demolish your business. So the forms of ownership are very much important. Okay, now let's make progress. Then we also have sources of documents. Where can we find these sources of documents? Remember, these documents are what we call document and authorization of transaction. For you to do any business, you need to understand to say that you need to have authorization. What is authorization? Authorization referring to what? Authority. What authority do you have? You can't just go to any place and open up anything without the authorization of the council. You can't just go anywhere and then start up without permission, without maybe documents that has to do with maybe registration document, permit document, and all those things. Those documentation are very much important in form of what? In the authorization of what? Transaction. Okay, so what are some of these source documents? The following are some of the source documents that are used in accounting. Number one, assets. For assets, you need to have documents for that. You need to have a document that will show the assets that you have. Owner's equity, you need to have that document. Capital, you need to have the document. Liabilities, you need to have the document. Expenses as well as income, you need to have documents. Okay. Then internal documents. What are these internal documents? Internal document, most transactions that are accompanied by source documentation, like documents. The source document represents the starting point. Yes, this one is just the starting point for a starting form of the recording process, providing detailed information from which each transaction is systematically classified and filled and subsequently entered into the respective book of the prime entry. That is what we call the internal document. This one, it is called the primary source. Then we also have what we call the external document. Under external document, most transactions are accompanied by source document. Source document represents the starting point of recording process, providing the detailed information from which each transaction is systematically classified and filled, subsequently entered into the respective book of the prime entry. Okay. Then The other one that we need to have, it's the filling as well as the archive documents. So even this filling and as well as the archive document, these are also starting points, and they're very much needed, and they need to be entered respectively in the book prime entry. Okay. Then the other one, it is the register as well as the register of unused document. You need to have the register, and you need to have everything has to be registered, and it has to be clearly shown within these documents. Okay. Then the other one is self-keeping of used as well as unused. This is the most transactions that are just accompanied by source documents, and documents that usually represents the starting point of recording process, providing the detailed from which transaction are systematically classified, filled, and subsequently entered into the respective book of the primary entry. Okay. Then authorization transaction. So these are some of the documents that are needed, and all these documents that we've looked at, they should be respectively entered into the book of the prime what entry. Okay. And we also have the source of support document, the source as well as the supporting document. Let's say, for example, if let's say they come to check maybe your business documents and whatnot, you need to have these supporting documents to prove to say that okay, and to put up an authenticity where you put up something to tell to say that okay, you are the owner of this property and whatnot. Yes. Then now let's look at this part here. The starting commercial enterprise accounting system that is used by business. So the following concept, even these concepts, just like I said, asset, ownership, equity, as well as capital, liability, expense, and income. These are part of the accounting system that are used by business. Okay. So here you need to have banking as well as banking account. If you are opening up under accounts, you need to have banking as well as banking account. You need to be banking with a certain bank. Like we have a lot of banks in Zambia, and then you can open an account from there, and then you start banking with that a bank, so that each and every month you're getting what we call a bank statement to know how you've used your money, how much expense, and how much cost you've incurred. Then also the guideline for receiving depositing money and depositing money. Guidelines usually show the amount that you're receiving and the depositing what monies that you are. Guidelines for paying the monies. These documents are also important, and then they are also part of starting up their starting point for the coding process, because provide information from which each transaction is systematically classified, and it is practically entered into the respective book of primary entry. Okay, internet banking. Internet banking, this is where you just get your phone. You can be able to check on your phone to see how much money you have in your account. And then you can also deposit and withdraw via internet. Okay. Then besides that, we also have other financial concepts which just include these 7 categories: asset, ownership, equity, capital, liability, expense, as well as what? Income. So these are very much important. And we also have what we call the cycle of trading activity. The cycle of trading activity. Maybe if you've been doing a business for a year, that will make a complete cycle now. If you go again for the second year, you should be able to reconcile with the books that you did the previous year, so that you check where you made some mistake and then you start correcting, so that this time around you remove those pitfalls that might make your business to collapse. These are some of the essential tools that are used in accounts. Okay. the double entry system. Remember double entry system? These are documents where you can enter things. Double entry system, like we'll put up or rather come up with these documentation, and then we'll be able to assess them through. Okay, then accounting equation. These are some of summation as well as mathematical computations that comes in accounting equation. Okay, now the general ledger. Now remember we talked about the ledger. We say the ledger has what? It has the expense and income. Expense, these are things that you like, you spend money to buy, either to acquire something or to machine at your factory or at your company. Then income, this is the money that comes in. Okay, so even in the general ledger, the following concepts are used in accounting: assets, ownership, equity, capital, liability, expense, as well as what? Income. Then we also have what we call apply the double entry principle. This one is also very much important, double entry principle. Then grouping of the ledger account. Remember, when you group these ledger account, then you can also get that information from the ledger account and put it into the trial balance sheet. Then you transfer it into the trial balance sheet. Then we also have what we call the continuous stock system. This continuous stock system, it is the system where you'll be able to, it's the system where you're able to, it's the system where you'll be able to do stock taking of how much items you are having at your shop or at your company. Okay, then other one, it is what? Periodic stock system. Periodic stock system, this is where you're doing stock taking. You are checking assets, liabilities that you have after maybe after a year. That is, so periodic, it simply means there is time that is you are taking maybe a period of 6 months to check what is there, or a year. Then we have trial balance. So under trial balance, this is where now you check, are the things documentation going as planned? Because you usually get things from the ledger, from the general ledger account, then you take it to the trial balance sheet to balance them up. Then we also have the cash receipt journal. Cash receipts are very much important in business, and they help the owner as well as they help even those people that are working to have a good understanding, because under here we have these cash the cash receipt journal as well as and transfer post to the ledger. Okay, then we have what we call the cash receipt journal transfer post to the ledger. Okay, in here then we have what we call the posting from a cash receipt journal to the general ledger. Okay, cash receipt journal to the general ledger. Okay, then the other one, it is just the cash payment journal. Cash payment journal, this is just a document that usually where you record the cash. If someone has brought cash, you record that client. This one came with cash, you record them and then you give them the receipt. Okay, then the posting from the cash payment journal to the general ledger. So from that cash payment, these are just the receipts, and then you transfer that into the what? The general ledger. Then from the general ledger, you're able to transfer that general ledger into what? The trial balance. Okay, now cash receipt journal and the cash payment journal. So in here, these are the most transactions. These are accompanied by the source documents, and these source documents represents the starting point of the recording process, providing the detailed information from which each transaction is systematically classified and filled and subsequently entered into the respective book of the prime entry. Okay, now in here we also have what we call the analysis cash book. This analysis, just from the word analysis, the word analysis simply means you need to analyze how much income, how much money, how much income, as well as the debit, the credit that is coming in. Then you need to record them in a book that is called the analyzing cash book. Then besides that, then we have what we call petty cash journal. What is petty cash? Petty cash, these are monies that maybe you use either maybe for to do some errands. Like for example, if maybe someone you need maybe to buy Zesco units, these you need to use petty cash. Maybe to get fuel and whatnot, all those to get these small item. We use what we call the petty cash. Okay, all right, okay. Petty cash voucher, we also have that one. Petty cash voucher, it is also one of the most important key when starting up accounting system. Then besides that, also the Impress system. The Impress system is also one of the most transactions that are accompanied by some source document that usually represents the starting point of the recording process, providing the detailed information from each transaction that is systematically classified and field subsequently entered into the respective book of the prime entry. Okay, then we also have the type of wage system. Wage, what is a wage? Wage, these are monies that you are paying. Either you're paying your workers, you're paying anyone, people that are doing piece work, or people that are maybe advertising, or maybe people that are working and for you. So we have what we call types, the types of wage system. Also, this one, it is very much important because the wage system, this one, we'll look at it in module 11, where we'll look at what the wage as well as the wages journal, how to create the salary journal. These are pay slips and whatnot, all those at them. Then in the other part is just the overtime remuneration. Under overtime remuneration, here, it is the document, or rather the journal, that tells you to say, if you say a person is working overtime, how much money is how much percent of cash do you give? That one is recorded into the overtime remuneration. Then besides that, then we have deduction. Suppose someone, maybe they've not reported. How much do you deduct? If they've not met your work according to your expectation, how much percentage do you deduct? That one, it is also highlighted in the wages as well as the salary journal. Okay. Then the wage journal, it is also accompanied. The word journal, it is one of the most transactions that are accompanied by the source documents, the source documentation that are represented, the starting point and the recording process, providing the detailed information from which each transaction is systematically classified and filled and subsequently entered into the respective book of the prime entry. Then salary journal, this one is also important. This is where you record payslip, give your workers payslip and whatnot. Yes, and also tell them the date at which the monies will be accrued. Okay, then module 12, this is where we will look at bank reconciliation. Under bank reconciliation, this is where you'll be able to, the bank will give you a report which we call the bank statement. Bank statement, every month the bank usually issues out the bank statement, a bank report. Every year you can get the bank report to record how much money you had in January, February, March, April, May, June, July, August, September, October, November, up to December. And then you'll be able to compile them. And then you'll be able to say, okay, this year I've made maybe 150 million, you've seen, or maybe you've made this amount. Then you need to reconcile, and then you say, okay, what is the plan for this year? Then you plan it as the year is beginning. Okay, then these modules are very much important to reconcile with them. And then we have the drawing up of a bank reconciliation statement. You draw up, then you reconcile with the bank statement to check. You compare with what is in the ledger as well as what is in the the trial balance. And then you also need to remember the errors that we took. There are some errors that usually affect the trial balance. Okay, so those ones you also need to take note of that. So under module 13, this is where we'll have the end of the year procedure. End of the year, this is where now you have something that will tell you how much money you've made the whole year. So this is very much important in accounting system. It is also very much important in financial accounts because it gives you credibility as well as it makes you to clarify and to know how your accounts as well as your monies are moving. Okay, so these concepts under module 13, this is where we look at the end of the year procedure on the following concepts that are used in accounting. You check assets. Are the assets still intact such that even the following year you can use them? Equity. Are the equity enough? That is, these are properties. Capital. Is the capital still sufficient? You check for liability. Are the liabilities still intact and whatnot? What are the liability? Yeah, you check for the liability, expenses as well as what? Income. Okay, then you also check for financial accounting. Then under that, financial accounting as well as what? The closing procedure. This one is very much important. Even every day, this accounting system, every day, like especially these people that are working in the bank, working in maybe sales department and whatnot, there is what we call the final account as well as what? The closing procedure. The closing procedure, this is where now you say, how much sales did I do today? And what is the closing money? How much have I done? And what is the closing amount? How much capital have we started realizing from our income, from our business? So all that, the final account as well as the closing procedure, these are the most important transactions that are accompanied by source documents as well as the source document that repeats the starting point of the record, the coding process, providing the detailed information from which each transaction is systematically classified and filled and subsequently entered into a respective book of the prime entry. Okay, thank you so much for your attention. This has been your host, Morgan Pika Israel Kama Jr. Be sure to subscribe to my YouTube channel and hit the notification button to get the content that will be shared on this platform. Okay, so if there are any questions, you can drop them in the notification box below. All right, okay.